Thank you very much for joining. This is a very important time from the taxes perspective in the year. In a year, we have been working so hard, but for every dollar we earn, we have been paying taxes around 30%, 40%, 50%, including federal and state. So it is very important to all of us to focus on reducing this biggest expense, which is taxes. So today, let's focus on what are the major areas you need to focus considering before filing your taxes, which is a tax season now because we're in a tax season, and also how do you optimize your taxes. Let's focus on few areas, and considering the shortage of the time, I won't be able to cover everything about the taxes, but I can give few very good points and nuggets for your reference. If anyone has any questions, feel free to post your questions in this chat box, and I will try to answer as much as possible. Or if you are watching this recording later in YouTube, then still you can feel free to post your questions. I would like to answer every question possible on the YouTube comments. I'm sharing my screen. Can someone confirm if you can see my screen? Yeah, thank you. So let's talk together. Today, whatever I'm sharing, I'm just sharing my knowledge. I'm sharing my knowledge with my community. So if you are hearing for the first time, this is a brief overview of my experience. I have 20 years plus experience in the tax, finance, and accounting field. And I worked for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison earlier. I have been serving as a Forbes Finance Council member for the last few years. And we are based out of Dallas as a corporate office, but we have presence in all the states of America. Like we have licenses to do to file taxes in all states of America. We have been serving our clients on filing tax returns, offering tax planning services, bookkeeping CFO services, and also India compliances, being I am a chartered accountant from India also. And I have been writing a lot of articles in for many social media channels. You can just Google search later about me to find more details. I have been supported by a big team of around, right now we are around 100 employees. It's a team of CPAs, chartered accountants, and other finance professionals. So, why do you need to know about taxes? Because taxes are very, very important, because The taxes are the biggest expense what we have in our life, in our life. Every year we have been paying taxes which are more than our home mortgage expenses, our home rental expenses, or even much bigger than our house vacation expenses. Whatever you earn, you need to pay taxes. Whatever you spend, you need to pay taxes. And even you die, you need to pay taxes. So taxes are the biggest expense what we have. If you really want to build your wealth, your focus should be on reducing the biggest expense, optimizing the biggest expense, which are the taxes. By working with an regular an accountant or CPA, or by using a Google search, you will be able to save taxes to some extent. But if you can have a proper proactive tax planning, the opportunity to save taxes are much bigger and higher. It's always important to know to focus on focus on proactive rather than reactive. And when we file taxes, it's very important with whom we work. In our life, three people are very important: doctors, attorneys, and accountants and CPAs. You cannot compromise on this. Our success depends on with whom we are surrounded by, with whom we work. If you have been filing taxes by working with an accountant or CPA, just think once, when was the last time you worked with him by taking some tax planning recommendations? So you have to meet your an accountant or CPA at least twice in a year, when you file your taxes and at the time of tax planning also. It's very important to work on that. And in the life, as per Benjamin Franklin, it is in the life, nothing is certain except death and taxes. So you have to pay taxes. It's only what you can do is how you can optimize it. So please work on optimization. Even you save few thousands of dollars every year, and if you can have a proper retirement planning in sync, you will be able to save few millions of dollars in your retirement plan in by the time of your retirement, with just one tax planning. By having a proper tax planning is very, very important. So if you look into the if you do the decoding of the taxes, if you are working on your tax planning now, it is not a tax planning for the last year. For the year 2024, if you are working on taxes now, it is called tax preparation. But what is a tax planning? Tax planning means it is a proactive planning where considering your life, business, and regulatory requirements to legally reduce the taxes, and it has to be done before the year, before end of this year and throughout the year. For the year 2024, the opportunity to save taxes might be very less. But don't worry. Let's focus on proper planning for the year 2025 now. That's all you can do. But when the year 2024, if there are any tax savings are there, which I'm going to cover to some extent. And one very important, what is a tax evasion and what is a tax avoidance? Tax evasion is doing something unfair ways to reduce our taxes. We never ever recommend to do tax evasion. Tax avoidance means it's an ethical way of saving taxes. If you look into the multi-millionaires, billionaires, their average tax rate is 1%, 2%, 3%. But we all have been paying 30%, 40%, 50% in taxes. The only reason how they are able to save taxes is by implementing tax avoidance guidelines, tax avoidance strategies. So now we are going to cover only tax avoidance guidelines. So why do we need to know about taxes now? We have to know about taxes now because this is a tax filing due date is coming up. We are in a tax season now. So we all have to file taxes. If you are running an S corporation or a partnership, we have to file taxes by March 15th of this year for the year 2024. And if you are filing an individual tax return and C corporation tax return, the filing due date is April 15th. My strongest recommendation is file taxes as early as possible. Don't delay it. If you delay filing taxes, what happens? You have to run it in the last minute. in the month of March or April, your accountant or CPA might be very busy. He may not able to give enough time for you to sit and guide and work with you. And also, if you file taxes now, you may be able to get your tax refunds much faster. Why do you want to wait in filing taxes? Anyway, you have to do it. Better to do as soon as possible. You, for suppose, if you are not yet ready to file taxes by this due date, don't worry, you can file extension by filing a form 7004. Your accountant or CPA can file this, or you can even file on your own also this extension. If you file this, you will get an automatic extension for these deadlines by 6 months. But please note, you have to pay taxes by April 15th. It doesn't matter whether you're filing extension or not. But you have to pay taxes. Even you got an extension to file taxes, you have to pay taxes by April 15th. So if you are living in Los Angeles area, which got impacted recently by wildfires, you have an extension time. Up to October 15th. So if you have to file taxes, as we have to file taxes by April 15th, now you will have an extension time of up to October 15th without filing any extensions file without having any extension file forms. Or it's an automatic extension if you are living in the wildfires impacted area. This extension is not only for filing taxes, it is also for paying taxes. So you have an additional time to file taxes and pay taxes till October 15th. And one more very important point, you will also get an extension even to contribute to your IRA accounts or health savings accounts also up to October 15th. And as we are talking about deadlines, you have to run if there are any W2 pendings, if you have to run for any payroll tax, if you have to run payroll for the year 2024, the deadline is January 31st. And you have to issue W2s for all your employees by January 31st. And you have to issue 1099s also by a 1099 NEC. It's a non-employee compensation. If you are paying for more than $600 to any person who is a non-employee, it's a non-employee compensation. You're paying a compensation, but it is a non-employee, then it is Form 1099 NEC. The deadline is this January 31st. February 28th is the deadline for 1099 miscellaneous. It means you have done the rental payment, royalty payments, or other any other miscellaneous incomes. And you have time up to March 31st if you want to do an electronic filing for 1099 MEC only. What happens if you don't issue 1099s? There is a penalty. It is mandatory that you have to issue 1099s to your vendors. If you don't issue 1099s, you have to file a penalty of either $30 to $50 or $110 or $219 based on when you are actually filing 1099 forms. And you don't need to issue 1099s if you have done the payments to any corporations, that is an S corporation or C corporation. That is why it is very important to get 10 W9 form before you are doing any payments to any outside vendors. So if in the W9 form, you can clearly see are there an S corporation or single member LLC or a sole proprietor or a single member or say an individual. It is very important. And what happens if you don't file taxes by the due date? If you are not filing taxes by April 15th, there is a 5% late filing penalty every month, and to the maximum of 25%. If you have you are the tax payment due dates are April 15th. If you have not done the tax payments by April 15th, then you have to pay 0.5% of the unpaid taxes every month to the maximum of 25% tax liability. and interest charges. On top of the penalty, you also need to pay interest. How much interest? The interest rates as of now, it is 88% per annum. Interest rates you have to pay. And how do you minimize your penalties and interest? Very important point. Lot of times we have been filing few thousands of returns in the last few years in US wide federal returns and state returns. With my knowledge and experience, I am saying this. If you want to minimize or your penalties and interest, please file taxes even though you can't pay taxes. It means a lot of times what I notice is when you file taxes, you have to pay taxes by April 15th. But a lot of times what happens, you may not have enough money to pay your taxes. Then, if that is the case, don't delay filing your taxes. Please file your taxes by April 15th, but you can do the tax payments whenever you have the money. Of course, you have to pay late payment penalties and also interest for the waiting period. And you can also do partial payments. Like example, there is a tax liability of maybe $12,000. But if you don't have $12,000, please don't stop entire tax payment. At least pay whatever money you have, because you need to pay interest and penalty on the unpaid taxes only. So if you have $3,000, please pay $3,000. Only the outstanding balance will be there. But file taxes, you pay that balance tax payment whenever you have money, along with your interest and penalty payments. And payment plans, IRS also allows to go for a payment plan. If you don't have enough money immediately to pay, you also have an option to pay the interest total tax payment in installments up to 12 months, 24 months, or 36 months. Like that, you have an option to split your tax payment into multiple months. Okay, so this is a lot of people are not aware of this. If you don't, it happens. We earn the money, but we might have used it. If you don't have money, you can go for a payment plan. You have to pay interest for that. And Anil, is it mandatory? Yes, you have. It is mandatory to pay taxes, late payment, interest, and penalties. But there are some exceptions on the penalties. IRS may waive penalties if you can demonstrate reasonable cause. Sometimes it happens that you are not able to pay taxes, or not able to file taxes, or not able to pay tax amounts due to some reasonable causes. What are those? Natural disasters or other uncontrollable events. Serious illness. So your family might got impacted with a serious illness, some of your family member, or inability to obtain the necessary documents or information on time. You have to get some documents from a you need to pay taxes, but you are not able to pay taxes because you are not able to get your documents. Like example, sometimes I have noticed it, all your books of accounts are with a CPA firm or an accountant. At your accountant place, there is a fire accident. You didn't get any reasonable, you didn't have any documents even to find out how much taxes, what is your total income from your business, and how much taxes you have to pay. Or otherwise, you have not even received your W2 from your employer. If you don't receive the W2, how do you pay taxes? How do you file your taxes? We recommend you, based on your pay slips, you file taxes. Otherwise, if there is any penalty, there may be an option where you can go to the IRS and ask for a penalty waiver. And to request for a waiver, you have to write your situation in writing. Very, very important. You have to explain your situation, why you are not able to file taxes on time, why you are not able to pay taxes on time. Then IRS may consider your request and may waive your penalties. And whenever you want to file taxes, please don't do it in the rush. What happens lot of times? What happens a lot of times, when you file taxes in the last minute, you miss a lot of times. You miss a lot of things. I have been receiving many requests to amending the tax filings because they might have missed some K1s. They might have missed some W2s. So it is very important, be well prepared. Well prepared right now. This is a weekend. Let's spend some 30 minutes or 1 hour. Start gathering documents. Whenever you have free time, just start gathering all the documents. Open one folder and start start putting all your files into that folder. So number first and most important, take your last year's tax return filing, the document, and go through that. What are the deductions you claimed? What are the credits you claimed? And it will help you to remind what else, what are the documents you need to file your 2024. If you don't do it, sometimes, like example, I might have multiple investments. One, sometimes I might have even multiple investments. You have to go and get K1s from every investment. I have seen so many number of times people don't even remember where they have invested, because what happens in the last few years, there are many syndicate investments happen taken place. Like you might have invested something in the land, something in the real estate, or something in the multi-family apartments onto multiple 25,000, 10,000, 20,000, 50,000. So different investments. But you have to get K1s from every of these investments, from all these investments. But unfortunately, people don't even remember where they have invested. Then how do you remember, how do you recollect it? One of the best sources, go back to your the last year 10 individual tax return and also business tax return, and see what all you claimed, and it will remind you. And ensure that you are receiving W2 form. You are going to get your W2 form by January 31st. Once you get it, please first review your W2 form. Please don't go blindly. There may be a possibility that your employer might have done some mistake on your W2. Just ensure that every number is captured appropriately. How do you read your W2? It is very simple. Go and just Google search. There are thousands of YouTube videos are there. How do you read your W2? Go and ensure that all the deductions are captured properly or not. Your 401ks are 401k contributions are captured or not. And if there are any if there are any other deductions are applicable are there, ensure that everything is accurate. Then form 1099. If you are running a self-employed, if you are self-employed, just ensure that your 1099 form is appropriate is accurate. If you are a real estate agent, you might be getting your 1099 from your realtor, from your agency. Just ensure that those numbers are right. And if you are having a mortgage home, most of us has mortgage homes. So mortgage on our primary houses, ensure that you are getting a 1098 from them. And 1099 dividend, if you are getting any dividend distributions, yeah, if you are getting any dividends on your deposits or fixed deposits, or even from your stock investment, if sometimes you get a dividend distribution on your stock investments also, ensure that you are getting all your 1099 dividends. And 1099b, if you are having a stock brokerage accounts with maybe Fidelity, Vanguard, or Charles Apps, just ensure that you are getting all 1099bs also. And also form K1. This is one of the biggest challenge what many investors face. You may not able to get your form K1 by March 15th. Go and check with wherever you invested. Please go reach out to them and find out when you are expecting your K1. If you are not expecting your K1 by March 15th, after March 15th, before filing your taxes, you go and file your extension. It is very common. Many syndicates or multi-family apartment syndicates, or otherwise your investments, yeah, or you might have done investments in pre-IPO stocks, or otherwise maybe some what do you call it, small VCs, venture capital funds. You might have invested. If you're not expecting your K1s by March 15th, just go and file your extension now. Fortunately, if you get your K1, go and file taxes whenever you receive the K1. So it's very important. Organize all your tax documents. If you are running a business, review your financials. It is a time for you to finalize your financials. If you have not yet done, please spend your time this weekend on your finalizing your financials. Ensure review all your bank statements, all the bank transactions, whether you are on W2 or whether you have a business. First, go and check all your bank statement transactions, business transactions, and also personal transactions. Identify your transactions. What are the investments you have done from your personal bank account? What are the payments you have done? What are the deductions you are claiming? Please review all your bank statements. prepare your financial statements and ensure and be ready and first be clear on what is your tax position. It means what is your total income. You should know what is your total income. So if you are not yet done this, bookkeeping plays a key role. You are supposed to know about how your business is running at least every quarter. I know all small business owners are very busy, but how busy you are doesn't matter. At least you get a control on your numbers every quarterly, one time at least. So and preventing an IRS audit, very very important. From the year 2025, IRS is going to increase the number of audits substantially. You might be familiar that in the recent times there was an Inflation Reduction Act was introduced by Biden, where IRS was funded with few billions of dollars to increase their manpower so they can increase their audits. So the earlier you might have been filing taxes with random numbers with manual adjustments. Please stop doing any more adjustments, unlawful adjustments in your tax returns. Tax return is a template. Whatever number you plug in, it takes. But it's your responsibility that you are filing an accurate tax return. Don't forget that you are signing your tax return and you are paying taxes. Don't I have been hearing that there are so many CPAs and chartered and also accountants just do all the adjustments as required. Like example, I have noticed many times people come and say that no, my CPA reduce my tax liability to what extent we want, and they charge something extra. Like example, there is a tax liability of $15,000, and I am noticing this most number of times when you work with out of country, out of India. Like example, if you are working with a guy in India to file your taxes, I have been noticing this. What happens? If there is a tax liability of $15,000, what those guys say is that I will make it to zero and we charge $1,000 extra. What they do, just they claim some random expenses to bring down your tax liability and they charge something extra. Please stop this type of filing taxes. Very important. The number of audits are going up substantially. So please prevent IRS audits by maintaining your books of accounts appropriately, by filing your taxes appropriately. It is very important with whom you are working. And when you are filing your taxes, try to work with a industry expert. If you are running an IT company, just ensure that you are filing your taxes with a person who can understand the IT business. If you're filing your taxes in the real estate, for the real estate business, ensure that the accountant is understanding your real estate business appropriately, because for everyone there is a NAICS code for every business. There is a for every at IRS they can see for every for what is the percentile of the cost. Like example, how much money you are spending on your payroll, how much money you're spending on marketing, how much money you're spending on different other expenses for that industry under that NAICS code. Very important. So it's all, you might have started working with a guy who was very small accountant when you started your business, but now your business might have grown up. When your business is grown up, it is very important to work with the right professional who can understand your business. If it's the accountant or CPA who can't even understand your business, then how does that help you? So it's very important. Like example, and also a common audit risk, data mismatch. And if like example, you are not disclosing a 1099 income, don't think that you have not received 1099, so you don't need to disclose that income. It is a blender. It is a fault, because when now the business owner might have filed 1099, but you might be missing receipt of 1099 in the postal document. And also, if you are an S corporation or C corporation, you don't have to receive a 1099. So because the other party doesn't need to issue a 1099 if you are a corporation. So don't miss disclosing your income. And also, whenever these are the very common audit risk, non-filers. So if you don't file your taxes on time, there is a high probability of audit. And also data mismatch, whatever you are disclosing, but like example, you are not disclosing some 1099s, but someone already informed to IRS that you got some income. So not data mismatch. Schedule C with larger losses. If you are having a Schedule C business, if you are having very big losses, that because those losses can be adjusted with your W2 income. Very important. Very important to note that it may trigger IRS audits if the losses are very big. Multiple Schedule Cs. If you have multiple Schedule C businesses, then also there may be a higher probability of an audit. 100% business use of vehicles. If you are having only one vehicle under your SSN or your business, very important, don't claim 100% expenses as business expenses. Try to, if you're having only one vehicle, try to say that you are only using the vehicle only for 80% or 70% or 90% for the business. The 10 or 20% is for the personal. And rounded numbers and estimates. Lot of times when you file your business tax return under Schedule C or your businesses, what I noticed is people use the rounded numbers like marketing expenses $500, electricity $200, or maybe payroll $300, or payroll $3,000. Don't use rounded numbers. And also high deductions relative to income. Like example, your income is $5,000, but your expenses are maybe $200,000. So those all are there's all high deductions related to the income. And also whenever you're filing credits, the probability of an audit risk is also very high, like employee retention tax credit or energy tax credits. If you're claiming, then the tax audit probability is very high. So it's very important when you file your taxes, please review your tax return. Your accountant or CP, you might be trusting them, but please review your tax returns in detail and ensure that you ensure that all the numbers are accurate. And BOI reporting, you all might be familiar if you are having a business or if you are having any real estate income, real estate LLCs, S corporation, C corporation, single member LLC, partnership LLC, or any type of LLC, investment LLC, you have to file BOI. You might be familiar, but very important, there is an injection right now. Injection, it means you don't have to BOI right now. Relax, you don't need to worry about this at this point. Let's wait for the next court order. As of today, as of January 19th, you don't need to file BOI. There is a court injection. And these are the very high level of tax rates. Very important to know how the tax rates are driving you. So like example, this is a married filing jointly. So if you see, these are the tax rate, these are the jumps. First break point, second break point, third break point. So as we all know that as the income goes up, your tax rates also goes up. But it's very important to know at what point the break point is. Like example, if your income is exceeding $383,900 married filing jointly, your tax rate is going to go up but from 24% to 32%, 8% increase. So what does it mean? If your income is around $400,000, so you are in a higher 32% tax rate. So very important for you to work on how you can bring down your income from 32% tax bracket to 24% tax bracket. Very, very important. A lot of times with a very small jumps, like you might have just crossed these levels, there is a probability that you might be able to bring down your income from 32% to 24% or even 22% by optimizing your tax planning. Tax planning is very, very important. And when you're talking about taxes, it is very important when you're filing your individual tax return, very important to know whether you're filing taxes under itemized or standard deduction. Under itemized, you might be familiar. Standard deduction means it's a flat tax standard deduction. We get a flat tax deduction for the standard deduction. So, like if you think that your expenses are more than standard deduction, then you might be able to go for individual tax deductions. But there are majorly five types of expenses are there. All these five expenses together exceeds the standard deduction amount, then you might be able to go for itemized tax deductions where you can claim more expenses. Your tax liability also will go down appropriately in line with it. So what are those five major expenses? One, mortgage interest and deduction. You might be familiar. If you are paying any mortgage interest for your primary home, you should be able to claim interest as a deduction up to the loan amount of $750,000. If you are filing any state taxes or local taxes or property taxes up to $10,000, you can claim as a tax deduction. If your medical expenses are more than 7.5%, you should be able to claim expense. You should be able to claim this under itemized tax deduction. Charitable contributions. If your limit is if you have done any charitable contributions for more than $250, you should be able to claim those charitable deductions also. And any personal casualty and theft loss deductions. If there are any losses due to the natural disasters, you should be able to claim those expenses also under tax deductions. All these different types of expenses together exceeds your standard deduction, then you should be able to file itemized tax return. Then health savings account. Very important account. Health savings account has a triple tax advantage. When you file taxes, when you do contributions to your HS account, you enjoy the tax deductions, and this money can be used for any of your medical expenses in your lifetime. It means if you are not able to use the expenses, these contributions for your medical expenses by end of this year, don't worry, the money can be rolled over to the next year. The money can be used for any qualified medical expenses in your lifetime as a tax-free distributions. As long and also it has a tax deferred growth. Till you use this money, you can even invest this money into the stock market, and the money can grow tax deferred. Very important point here. The due date to contribute to HSA is till April 15th for the year 2024. If you already have an HSA account, if we have a high deductible medical plan, then only you can contribute to HSA. If that is the case, then you can go for high deductible. Then you can go for HSA contributions till April 15th for the last year. You might have a lot of times what I notice is people have HSA account, but they don't optimize the contributions. It means as a married filing jointly, you can contribute up to $8,300 to HSA account. You might have not done this contribution up to $8,300. Just go back and contribute this patch up, the catch up, how much money you have, the catch up difference is there. Please do this catch up contributions by April 15th. So by contribution, even you contribute $3,000, you would be able to save around 30-40% in taxes for these contributions. Coverdell ESA. Coverdell ESA is this is also like a 529 plan. It means you can contribute up to $2,000 for your kids' education in Coverdell ESA account. What does it mean? This almost works like an HSA, 529. So whatever money you contribute, you don't get any tax deductions on these contributions at the federal level, but the money can grow tax deferred in the future, and the money can be used for any qualified education expenses for your kids. So, but there is a income limits. If your income is less than $220,000, then only you can contribute to the Coverdell ESA. Very important. So up to $2,000 for the year 2024, you can do the contributions now also. And 529 plans. 529 plans, there is no federal tax deduction on your tax returns, but at the state level, you might be able to contribute to 520. You might be able to get the tax deductions. 529 but from state to state, how much money you can contribute, how much money you can get a tax deduction changes. But just I'm giving with an experience every state has a different rules, but most of the states allow to get a tax deduction of up to $20,000 married filing jointly on your 529 plan. But my recommendation is please go and check with your state law, state rules, state income tax rules to find out how much 529 contributions are tax deductible. 529 plans are one of the great plans for our kids' education. Going forward, I am also going to do an exclusive kids' education. What are the plannings you should do to save money for your kids' education? In the next couple of months, I'm going to do that seminar also. But for now, 529 plan, when you contribute, you don't get any tax deductions at the federal level, but at the state level, you enjoy the tax deductions. But in the end, the money can grow tax deferred, and the money can be used for any qualified medical expenses. And I'm sorry, it's not qualified medical, it's a qualified education expenses. My apologies. I think the correction is required. Qualified qualified education expenses and enjoy the tax deductions. And you have time till April 15th for the last year contributions. And S corp election, if you are running any if you are running any business, if you have a single member LLC, and if you have income of more than $50,000 for net profit, my strong recommendation is to convert your S corp single member LLC to S corporation, and you have time till March 15th of this year for the previous year as a late election. Very, very important. And you can, by the converting your business into a S corporation, you can save social security taxes, which is 15.3% on your net profit. And so, in simple summary, you can contribute in HSA now for the. So you can do the contribution to the at very high level. These are the strategies we can do for the last year before filing our tax returns. So a health savings account contributions you can do, traditional IRA contributions you can do, Roth IRA contributions you can do, profit sharing retirement plans. If you have a solo 401k, you can do profit sharing retirement plans now. 529 plans contributions you can do, SEP IRA or solo 401k contributions you can do before filing your taxes. So all these strategies can help you to bring down your tax liability. And solo 401k. I'm sorry. Okay, I think so. Okay, so I think some slides got messed up. So if you're talking about retirement planning, it is very important to know traditional versus Roth. So what is a traditional? Traditional is like just imagine 401k. Okay, there are many different types of retirement plans are there, but conceptually, if you understand what is a traditional is like the money whatever you contribute, you enjoy the tax deductions now, but in the future when you withdraw money, you need to pay taxes on that. But if it's a Roth, whenever you contribute, you don't enjoy any tax deductions now, but in the future whenever you withdraw money, completely tax free. Roths are great accounts to have. And 401k, let me start with 401k. For the year 2025, you can contribute up to $23,500 for your 401k account. And if there is an employer matching, please don't ever miss free employer matching. It's a pure free money. And after employer matching, if you have more money, I strongly recommend you to go and contribute to the 401k, because for every dollar you are contributing, you are enjoying 30, 40, 50% in taxes. It's a great way to save or to optimize your taxes and also build your retirement accounts. And SEP IRA, you have time till April 15th, and if you are filing an extension till October 15th to open a SEP IRA and contribute if you are having any self-employed business. If you are a real estate agent or financial advisor or insurance agent or maybe a photographer, if you have any self-employed business, so SEP IRA is one of the great way how do you save your taxes. You have time now to open SEP IRA and do the contributions. Like solo 401k also you have time now. You can open solo 401k and also do contributions of up to $69,000 for the last year. There is a change in Secure Act 2.0. You can open solo 401k before April 15th and do an employee contribution and employer contribution. If you are doing an employee contribution, please note that it has the W2 has to reflect that, and the due date is January 31st. If you open a solo 401k after January 31st for the last year, then there won't be any employee contribution, but still you can do employer contribution of 25% of your salary. Very, very great tax planning tool for us, which is solo 401k if you are a self-employed with no employees. That is, there are no external employees. And IRA, you have time to contribute to IRA, individual retirement account, till April 15th, up to $7,000 for you, for your spouse also, even though she is not working, and you can enjoy the tax deductions. But if you noticed, if you do Google search, there are a lot of successful business owners or successful people have Roth IRA accounts. So what my knowledge, what my experience is, most of us don't have Roth IRA. Roth IRA accounts are very important because you can contribute up to $7,000 into Roth IRA account if your incomes are less than $240,000 for the year 2024. You have time till April 15th now. And if your income is more than $240,000, you can go for a backdoor Roth IRA. Backdoor Roth IRA is one of the great strategy if your incomes are more than $240,000. You can contribute the traditional IRA. From there, you can roll over the balance to the Roth IRA. And there are a lot of questions on this topic. First of all, to do backdoor Roth IRA, your income limits doesn't matter. Even though you are having $1 million income, still you can go for backdoor Roth IRA. And whenever you want to do this conversion from the traditional to the Roth IRA, there are no income limits again. And you can do it any point of time. So even though you are having $1 million, you can do this contribution and you can do the conversion again to the Roth IRA. But the very important point, we don't recommend to go for a backdoor Roth IRA if you have any existing rollover IRAs, SEP IRAs, or any other traditional IRAs with a balances. If you want to do backdoor Roth IRA in that situation, we recommend you to roll over all your IRA balances to the Roth IRA, then only go for a backdoor Roth IRA. Very important. Whenever you do this entire conversion of your existing IRAs to the Roth IRA, you have to pay taxes. If you are not very clear on this, you can feel free to post your questions. I'm happy to answer in the chat box, in the YouTube chat box. And later, otherwise, you can send an email to me. I'm happy to answer your questions. And so this is what the backdoor Roth IRA. Day one, contribute to $7,000 to traditional IRA, and day two, convert to the Roth IRA. So one very important rule, you must convert. If you are having any traditional IRA balance accounts, you must convert other traditional IRA balances to Roth IRA first, then only go for a backdoor Roth IRA. Very, very important strategy. Every one of us should have a Roth IRA or backdoor Roth IRA. If you're not doing it, you might be missing a golden opportunity of building your tax-free wealth in the long run. And if you're already having any old traditional IRA accounts, rollover 401k accounts, traditional or SEP IRA accounts, old balances, please, my recommendation is to convert to the Roth IRA, because you have to pay taxes whether now or at the time of retirement when you withdraw money. Rather pay taxes now and let the money grow tax-free in the long run. And mega backdoor is one of the other great way to build your wealth. Considering the shortage at the time, I might not be able to go in detail, but if you are having a SEP IRA, or if you are working with any big corporates like Amazon, Microsoft, or Pfizer, or HP, or any other, there is a big list of corporates who are offering mega backdoor Roth IRA. You can go and check with your employer if they are offering mega backdoor Roth IRA. If mega backdoor Roth IRA if they are offering, you can contribute up to $69,000 into a 401k account. So and the money can be Roth, completely Roth, 100% Roth contributions you can do. So whatever as an employee you can contribute you can contribute your 401k as an employee as a Roth, and your matching right now as per Secure Act 2.0, you have an option to elect Roth even for the employer contributions, and on top of that you can do an after tax employee contributions of up to $46,000. This is a golden rule. If you are working for a big corporate and if you are not optimizing mega backdoor Roth IRA, you are missing so much in your life in building a tax-free wealth. Mega backdoor Roth IRA is one of the great way to build your wealth. So very important. And Anil, you are talking about so many things. What is my strategy? This is what the strategy. First of all, first max out your employer plan contributions. It may, if like assume you are having a full-time employment, and if you are also having a outside small side business like you are a financial advisor or insurance agent or you are a real estate agent, these are the recommendations I wanted to follow. Number one, first do your employer matching up to, you do your 401k contributions up to employer matching at your employment. Number two, go for Roth IRA contributions. Number three, HSA health savings account contributions. Number four, set up and max out your solo 401k. Number five, then Go back and do max out your 401k accounts, employee contributions. Then the last one is mega backdoor. Follow these guidelines, you are going to build a big tax free wealth in the long run if you can follow all these strategies. On top of that, donor advisor fund, this is also one of the great way to build your charitable contributions fund. Whenever you want to contribute to the non-profit organization, if you are not yet sure to whom you want to contribute, you can open a donor advisor fund in any of your Fidelity, Vanguard, or any other accounts, any service providers, and you can do the contributions and you can enjoy the tax deductions. Very, very important of the donor advisor fund. And and if you're running a business, just whenever you're filing a taxes, whenever you're filing your taxes, just ensure that you are claiming all this. Whenever you're filing taxes, ensure that you are claiming all these recommended tax deductions are there for your business. So what are those recommendations? Ensure that you are claiming your travel expenses, medical expenses, any accountable plan, or if you're incurring any expenses for any of your electronics like computers, monitors, laptops, or otherwise iPad, Apple Watch, or otherwise claiming home office expenses. You can claim all these expenses as long as you can demonstrate those are business expenses and you have proper support and documentation for all your expenses. And if you bought any vehicle last year, you can enjoy the tax deductions of up to 60% of your value of the vehicle as a tax deduction, as a depreciation also. And the last topic for this year for today, FBAR, foreign bank account reporting. If you have any bank balances in any foreign financial accounts for more than $10,000, you have to file FBAR, foreign bank account reporting. Very, very important. If you don't file FBAR, then there is a probability of you're getting a notice and you need to pay a lot of penalties. What is the definition of foreign financial accounts? If you are having balances in any foreign financial accounts, a definition of financial account means bank accounts, savings accounts, security accounts, stock market, mutual funds, or insurance policies. That is cash value of your insurance policies, like LIC policies. In any foreign financial accounts, that is, if you are having any of these accounts in India or maybe any other country out of America, then you have to file FBAR. And if you don't file FBAR, there is a penalty of up to $500,000 or 10 years for an willful violation. And very, very important, whenever the secret ingredient for great tax planning is working with the right tax strategist and team. Our success depends on with whom we work. Very, very important. If you are running a business, we're happy to sit with you and design a proactive tax planning. And by looking into different parameters, tax planning is different, tax filing is different. When we do a tax planning, we look at the retirement planning, deductions, legal entity structuring, insurance, loopholes, and other great strategies we consider, and we design a customized tax plan for you. So tax planning is very, very important. And if you have any questions, I'm happy to answer those questions. Thank you. Feel free to post your questions in the chat box. I'm happy to answer right now. Wow, there are so many questions. Let me take a few. Okay, so I'm going through all the questions, whatever is posted on the YouTube channel. So before getting into that, this year we are focusing on building our YouTube channel. If you are not yet subscribed, please subscribe. All our future webinars will be telecasted, live streamed on the YouTube, and we are also building our YouTube channel. And subscribe and share this YouTube channel link with your friends and families. So, do we need to file anything if you have an LLC? Deadline is for it. Yes. The deadline to file your single member LLC is April 15th. And if you don't have any transactions in the last year, then you don't need to file tax return for your LLC. If you have any transactions in the last year for your single member LLC, then it is April 15th is the deadline. What if you don't receive all K1s on time? Shaker, you need to file an extension if you have not received any K1s yet. Uh, File an extension and file taxes by October 15th. Sridhar, file your taxes as you know to begin with. No, I may not agree with that. Don't file your taxes because you have to amend your tax returns. When you amend your tax return, the probability for audits will go up. I always try to avoid amendments. Rather, if you have not received your K1s on time, I request you to file an extension, but pay taxes by April 15th. Don't delay approximate taxes and file an extension and file your taxes whenever you receive by K1 by whenever you receive your K1s. If you don't receive K1s by October 15th, then my recommendation is file taxes on time by October 15th, extension for extended time. After that, go and amend it when you receive your K1s. 1099 dividend for companies operated outside. Do we need to pay taxes? The dividend received is reinvested but not taken in grant. For company operated outside, do we need? Yes. Answer is yes. If you are receiving 1099 dividend form, you have to pay taxes on that, whether they reinvested or not. You received an income and you received it. So you have to file taxes, or you need to pay taxes. Okay, if you received it, you need to file taxes. Okay, like example, if you have an investments in India, like example, and but you have not received money, if you have not even received that money into your bank account, then you have an option to file taxes or to pay taxes at the time of receipt, or on accrual basis, on year basis. You have an option, both the options you can choose. You can choose any one option and you can pay taxes. Pawan, what is claiming? How many years IRS can go back to do on an audit? Okay, IRS can go back up to 3 years in general to do an audit. But if they find any fraud, or if they find any fraud transactions, then IRS has a right to go up to 7 years to open your files and do an audit. Gaurav Sharma, 529 plans can be used for medical expenses. As Gaurav, my apologies on that, and I think it has to be corrected, and I will also update it when later. I will go back to the YouTube recording and I will update it. My apologies. 529 plans can be used for any qualified education expenses only. It's not for medical. There was a typo which could have been corrected earlier. If you move the traditional IRA to the traditional 401k, there is no balances in IRA, then can we initiate the backdoor Roth IRA? Answer is yes, VP. If you are moving your traditional IRA balance to the traditional 401k, then you don't need to pay any taxes and you can go for a backdoor Roth IRA. Great session. Thank you. What's the debt deduction? If you have invested in a 401k or Roth 401k while you are on H1B visa and then moved back to India after 10 years, what we need to do? Take consideration. Please advise. 401k amount can be withdrawn even though you are in India. But if you are moving to India, there is a status called residential but not permanent, not ordinary resident but not ordinary resident in India as per Indian income tax rules. Then there are some tax exemptions are there. So if at all, if you are moving to India, my recommendation is you have an option to withdraw your 401k with a tax in a tax efficient way in 2 years. In less than 2 years, you have to withdraw. So, but I am not going in detail because it's a bit complex topic. I can have a separate webinar on that topic itself. Can you share one-on-one meeting link? You can reach out to us on Anil, hello@azfintax.com, which I'm going to share our contact details by email to all the registered participants, and you can reach out to us for any one-on-one scheduling meetings or to file tax returns with us. Excellent presentation. Thank you very much. Gaurav Sharma, What are the limits on the Roth contributions for the 2024? Contributions are for IRA it is $7,000. For 401k it's $23,000. Abjit Mishra, do we need to pay taxes in US while declaring FBAR? Answer is no. It's only just declaration. FBAR is only a declaration. You are not paying any taxes. If you have any bank balance, you just go and declare it. Lakshmi, any webinar to conduct on tax planning in the future? Yes, I'm going to do a lot more webinars in the next couple of in the next couple of months because of the tax season. Just stay tuned on our YouTube channel. You will get all the notifications whenever we are posting a videos or shorts or webinars. Okay, YouTube is not working. Need your appointment so that we can book an appointment. Please reach out to us by your email hello@azfintax.com if you are looking for any appointment or to work with us. We are also going to respond to you by chat in the comments box. How do I set up an appointment? Okay, I already answered. Could you share one-on-one? Okay, yes. Hello, anyone. Everyone is asking for a one-on-one meeting. Please don't waste. Okay. Don't waste your time, sir. Yes. So please note that we offer one-on-one tax planning or one-on-one guidance. For a paid consultation, you can reach out to us, but we will be charging us for one-on-one sessions. We will be charging a paid consult. We will be doing a paid consultation. Skywalker, what are the considered transactions for a single member LLC? Example, rental property. For the rental property, I'm going to do an exclusive tax planning webinar for the real estate investments and realtors in the next upcoming weeks. Please stay tuned for that. Can we claim losses for corporate debt funds invested through traditional IRA? Then company go for bankruptcy. Answer is no. You cannot claim for the losses in the IRA accounts when you file taxes current year. Okay. So then, Shekhar, how do you calculate our approximate taxes? If you're filing an extension, what is the methodology? So IRS is giving an estimated tax form. I don't remember the tax form number, but if you can reach out to us, I can give an estimated tax form number. IRS has given a standard template where you can do your where you can calculate estimated tax payments also. For a rental property in India, if you're filing taxes in India, do we need to pay taxes in India, US as well? Abhineet Mishra, you have to declare your rental income in US also. And if you have done any tax payments in India, you can file it. You can get a tax credit for your tax payments in India when you file taxes. In simple summary, you have to file taxes in both in India and in US if you have any income in India. But we have a double tax avoidance agreement between US and India where you can enjoy the tax credits for the tax payments in India. And there are few more questions are there, but we're going to answer in the YouTube. But considering the shortage of the time, I'm stopping the session for now. But I am going to answer for every question I am receiving on the YouTube, but not on the not like this. But I will be answering as a comment. And thank you very much. We are trying to promote our YouTube channel. That is the reason we are this time we are not able to allow everyone to ask questions directly. So if you have any questions, feel free to reach out to us by sending an email to hello@azfintax.com or post your questions in the comments box. I'm happy to answer all your questions. But thank you very much. It's already 1 hour 10 minutes now. I'm stopping this webinar, but I will be answering to every question in the comments box. Feel free to post as many number of questions as you can. I am happy to answer all your questions. And thank you very much. Bye.